Welcome back, everyone. The purpose of today's video is to go over an NVDA trade that I took for an ROI of 364%. This was when NVIDIA was on making a move up with all the semiconductors, when the big chip bill for over $50 billion had hit Congress and just been passed, and everybody was thinking, let's go calls, let's go calls. I leveraged the data and used it with my existing analysis as an adjunct. I leveraged the data from unusual whales to put me over the top to take this trade, to buck the trend of everybody going to the long side. We went to the short side, and like I said, that returned a 364% ROI. And as you can see that, I have the post up here. That is from Twitter. I called it out publicly. That was 12 minutes before the market opened. Obviously, I always provide updates in the morning, and that was the entry point. I've got the trend line right here at 178.30. And of course, we're going to take a look at the unusual whales data. Just really quickly, what do I have in front of you? This looks a little bit different. This is not Thinkorswim. This is IBKR, also known as Interactive Brokers. I like to use that sometimes for my videos and sometimes Thinkorswim. The reason I put up IBKR is that is where I place my executions. You could do your charting wherever you want to do it, but executions, that means your buy, your sells. I do that through IBKR, and I want to say IBKR Pro, because the executions are lightning fast in my experience, and executions are everything, right? You don't get the right execution, that means you don't get filled. You don't get to buy. You don't get to buy in. You don't get to sell at the price you want. Makes all the difference in the world. I recommend taking a look. See if it's a fit for you. Doesn't cost anything to open an account. I leave that link in the description. Take a look, click on it, check it out, see if you think it's the right fit. So let's take a look here. I have the data from unusual whales, and then we'll kind of go through a little bit of the price action. But the idea here with this video is to tie in a lot of concepts that I've already gone over. So I've gone over various concepts about how I filter and what I look at and what I'm thinking, what I'm doing. And there's no replacing real use case scenarios, right? So maybe you've seen some of those concepts in the past, but I really see a lot of value in tying it all together and saying, okay, what are we doing here? How do we put a trade together? What are you seeing in real time? So that is the purpose of today's video, to show you that what you can do with unusual whales. So now let's take a look here. I'm looking at the NVIDIA flow, and as you can see on the NVIDIA flow, we're coming in with a big bearish flow. Now, I've discussed premium and how that's important, and what you're seeing is these premiums aren't overly high, certainly not for a mega cap stock like NVIDIA, right? Some of them, you mean 134,000, that would normally make my filtering. 63, 48, 95 is all right, but then you see some in the 20s. A couple things that I want to draw your attention to. First of all, here's what's important about that, is we vary our premium expectations based on expiration, right? You're not going in, you're probably not going in, it doesn't make sense in terms of an exposure calculation to go in with these deep premiums unless there's a specific event coming close to the end of the week, and this was an end of the week trade, right? So we're looking at the 22nd. So we have very little time to expiration. So we're looking at tight time. Some of these are 10 days, but we're towards that end of the week. Some of them are 3 days, you see, if you move down. So we're light on the expiration date. We're coming into the close of the week. There's a strong bullish flow. If you also take a look at something else that I talk about, take a look at the times, right? So this is just flooding in at close. And so I had some specifics on this. I talked about it with everybody. There's a lot of analysis that went into this. I didn't just look at the flow and say, oh, bullish flow or bearish flow, I'm taking a big trade. That is never a sensible thing to do. That's why there's no magic bullet. I explain that to everyone. Be careful. If you think that you just look and see, 5 bullish flows or 5 bearish entries, you're going to get burned. You have to understand, and what this does, what unusual whales or any options flow has ever done for me, is just added to my existing bias. Because what is trading, right? I want to go over that really quickly. Trading, it's a lot of things, but one of the key things, it is adding up different data points to support your bias. The more that you have lined up, the more likely it is that you're going to be accurate, right? Like if I see the fundamentals don't line up, plus there's bad news, plus there's a bearish flow, plus there's negative pressure on the markets, that's good, because that's what gives you an edge. If I just see one thing, it's like flipping a coin, right? If I just say, I don't know, closed lower than yesterday's numbers, it doesn't make sense. You want to go deeper. So I had a deeper analysis that I shared with everybody, particularly my insiders who I give deep analysis and breakdowns on things. On the markets, I felt like the markets were looking a little bit of a pullback. I looked at NVIDIA and I felt like the move was already made. And there's a lot of reasons I had that calculation. And what I told everybody was, this move has been made to the upside and everybody's coming in thinking buy, buy, buy because you see some politicians holding stock, don't necessarily think that. They held their stock, they bought their options a while ago. They're going to look to exit, right? They're going to sell into strength of everybody buying. We're going to take that as our exit. So you see that from Unusual Whales. I lined a few things up, and the things I want to remind you of is the premium. I was very conscious of the premium amounts. I was looking at when those bearish entries came in. You looked at just minutes before close, right? So some of them looks like multiple orders. If you look here on it, you'll see 1458.19. You see multiple, right? That could be the same order just broken up. So although it appears it flies under the radar because it's a little bit under our premium, if you add them up, these are actual bigger orders. Okay, so moving on from that, let's take a look at the price action. So in the price action, of course, this was a pretty easy one, right? So we're going to move our cursor over here. We see that we break. We get at 178.30 with our entries, and we're looking at momentum. So I'm putting that out there. We're getting that momentum, of course. This is at the market's opening. We're able to sustain and withstand like a little bit of a pullback as we start to push down. That is a big push down. And this is a 10-minute candle. I just want to tell everybody, just for perspective, it's just to fit a little bit more, aggregate some more data into the page. Sometimes I'll do it on 1 minute. When I am trading, I am always focused on 1 minute because I want more information rather than less, right? I want to see what is happening. Some people tends to overwhelm them. Just zoom out, give yourself a different time frame. So if you see a lot of this and it makes you nervous in your trade, go to 3 minutes, go to 5 minutes, do what works for you. But again, as you can get there, more data is better, not less. So we break down, there's no looking back. In this 10-minute period, I mean, we absolutely tanked. You can hold some at this point just to go over it with everybody. Again, this is meant as a recap of tying all kinds of things together, tying our Unusual Whales methods and filters together. You get a little bit of a pullback, you take off some significant size. I think by here, on this pullback, you're out entirely because theta is just going to eat up your premiums. Even if you just took the trade from here to here, we're looking at really, really big returns. Of course, you could look at my Twitter page, see a lot of people posting over 100% on this trade, over 200%. And of course, if you held, you could have a little bit higher. Maybe you'll even hold into next week. So I wanted to condense this into a bit of a simple trade. It also reminds you of a few more high-level things that maybe you're not ready to analyze, but don't always chase the news. That's another one that I'm going to just kick in here. You see all this news of the CHIPS bill, $50 billion plus. This is making a big run. We've already seen the move. They say, buy the rumor, sell the news. There is something to that, meaning that the move might already be in, right? People are making their money. And what do people like to do on these sort of news events? You like to take profits, right? Because it's a quick thing. So once everybody knows, you take your profits. So once everybody else is buying on retail, the people who made the moves earlier are selling. A little bit of that is analysis. You're looking at we're overbought. You see over momentum. You're also looking at their position and saying, if you're in this, you probably have to take some profits right now because you're ahead by so much, particularly because I was able to analyze that they took options, right? So I'm looking at that saying, okay, you're way ahead. So that's a little bit of it. But back to the Unusual Whales element. Again, we saw that flood in right before market close, and that just aligned so well with my existing bias. I was ready to call this trade out anyhow. I saw this on Unusual Whales and I said, bingo, there it is. That's exactly what I'm looking at. So when you are taking your trades, that's what Unusual Whales is fantastic for. Any options flow that you're looking at, Unusual Whales, obviously to me right now, they have their finger on the pulse. It's the best for options flow. What it's best for is taking it, adding it with additional information and data points, and being able to do exactly what I did and say, bingo, when all this lines up, look at the kind of move that you get. And you get it with confidence, because I actually called 2 entry points because I wanted to make sure that we got in on this. I do that sometimes. Sometimes I'll say, if we move up, I'd like to get in here to take advantage and get a bigger move down. But I'll also add and say, but look, if it just starts breaking down, I'm not missing this, right? That's a high level of conviction to say, I'm not missing it. We'll get in with the momentum. Even though maybe the IV is starting to run up a little bit, I want into this trade because I have a high level of conviction. What helps you is lining up more and more data points, and that's what we did with Unusual Whales here. I'm learning to speak again, I guess. That's what we did here, and we saw that bearish flow, and that was really a great adjunct to what I was already doing. If you're interested in checking Unusual Whales out, it's also going to have a description, also going to have a link in my description. And of course, if you want to learn directly from me, profitstaken.com, I'll put a link in there as well. That's where the insiders are. That's where I share a little bit of deeper data. But hopefully this helps everybody tie it all together. that late flow, the time on them, the days to expiry, looking at premium, getting your entry. Don't chase the news. I don't like to chase the news. Line up multiple factors, get your adjunct, make your trade, be successful. Again, I hope this was helpful, and we will look to see you in the very near future. Thanks, everyone.